Good afternoon, all, and welcome to the second in our series of Strengthfinder webinars. I'm hoping that you'll be able to see the presentation that we've uploaded. Everything that we do talk through today, including a recording, will be shared afterwards. I want to introduce myself. My name's Will Cookson. I'm the Business Development Manager for Economic Development. And we also have Duncan, my colleague, who will be joining us for the presentation. And Duncan is our senior economist. So without further ado, I suggest that we get going. I wanted to introduce MZ. We are well, we'll take you through the agenda first of all. We're going to do introductions, as I've already spoiled that. We are going to look at your challenge and the challenges you face as organisations. We're going to look at how we can help. We'll get into the explaining the cluster model and the classifications that sit behind that. Then I'm going to hand over to Duncan, who will take us through looking at local strengths, investigating a particular cluster, and specifically understanding risks. And we'll focus in on a particular risk. We will then finish up by talking. I'll come back and talk a bit more about how we can help you with bringing insight to your strategic planning and what interventions you may want to take place at local level. We'll go on to next steps, where I'll tell you about our next webinar in this series. And there's an opportunity throughout to raise questions. And we'll pick up any questions at the end of the presentation. So do share those with us. So yes, a little bit about MZ. Our mission at MZ is to help you with understanding the local labour market and to help organisations to make better decisions. And we do that by providing insight through the data that we share, very much focused on industry and occupation to allow you to make strategic and tactical decisions. The markets in which we operate are the economic development world, education, and very much further education and higher education, and also employment, working with organisations to support their recruitment strategy and talent management. So, the challenge as we see it, that many of the organisations that you represent are facing, is how to retain, grow and attract new business and to grow existing business within your area. Now, we recognise that this is never an easy task, and we understand from our work in this area that this challenge is exacerbated by many factors, and these change. They change year in, year out. Some of them remain, but obviously there are issues such as the end of the central government grant and the impact that can have in terms of income and revenue from business rates. There is the issue around devolution and how best to make the case for your area to central government. There is Brexit, of which we will, as everyone says, we will wait and see, but there is obviously, we know that there are factors to take into account around migrant labour and which industries and geographies that migrant labour may be, there may be a higher quota of. Automation is an issue which we will talk about within this webinar. We also are aware from conversations we're having with local enterprise partnerships and with local authorities about the need to localise the government's industrial strategy, which was published in November last year. And then there is the common and recurring issue about competition between regions and understanding really what the strengths are within your region. So to be able to succeed, bear in mind those challenges that I've mentioned. We have developed a model, which I'll go on to tell you more details about, but the key thing as we see it is that you will need to align your interventions with your economic strategy, and you'll need to have a clear evidence base with which to underpin which interventions you're going to make and to inform those strategic decisions. To do that, you'll need to have a good understanding of local industries and to be able to identify which specific needs and issues you want to tackle. It's critical that you're able to quantify and understand the risks within the economy, many of which I've just listed, but also, as you can see here, some national issues such as the ageing workforce and Brexit. And then absolutely critical is to turn this into actionable intelligence on what is needed locally. So what can we do? How can we help? Our focus is on supporting you to understand what's driving your local economy, which industries you have that set you apart from other regions and maybe from the national economy as well. To do that, we provide insight and data to be able to enable you to identify which sectors can be seen as potential strengths, opportunities, and also threats, and ensure that you're best placed to build a strategy that can retain, grow, and attract businesses to your region. To do this, we've developed a new model, which some of you may be aware of, but if you're coming new to this, I'll give a brief explanation here. It's a methodology that's based on clustering industries together into economic clusters. That gives you a context which allows you to compare yourself to the national economy, but also to other regions, but also to dig into the supply chain within that cluster. It also allows you to home in on key occupations that sit within those clusters. So turning industry skills demand into specific concerns that can be actioned upon to allow you to bring greater capacity to that particular industry. We come back to this as well. It's about being able to provide a picture of your local economy that allows you to target the right interventions in essentially high demand occupations where you have employers that need a particular skills mix, and then putting in place a skills intervention in order to support that. We try and provide the data that and the insight that we share in a very clear way, and we set that out in clear steps whereby we show the big picture which you can explore. From that you can start to make decisions in regards to where you might prioritize interventions or activity, allow you to investigate and draw comparisons with other areas, and then absolutely key to use that insight in order to inform action. So the new cluster classification, this way gets more technical. We start with 560 plus more industries at a 4 digits SIC level, which essentially means that each industry has a classification, and that's the lowest level that you can go in terms of the available data. Then what we've done is analysed those industries and looked at whether they are local or tradable, and by that really we're drawing a distinction. Local will be industries and services that essentially are delivered where the service is consumed. So the output will be where it's consumed. So we can look at education, for example, the health service, for example, and occupations relating to those, but also retail and shops. We've also made the distinction of tradable, where we are looking more particularly at the type of organisations that will develop something that is consumed. It won't be consumed locally. So, for example, that would be, for example, a manufacturing industry. And if we look at particular elements of the manufacturing industry, we know that those products are shipped far and wide and internationally. And then what we've looked at is the supply chain that sits within that, what trading is done within those clusters, and are they co-located? Essentially, what we are trying to do is make a distinction to allow you to have a picture of your economy that allows you to see how they are using, whether they're using the same workforce, and do they rely on the same occupations? Is there a cross-pollination there between industries? And are they buying and selling from one another? Using these measures, we've been able to identify linkages and distill what was 560 plus industries down to 49 core clusters. And here they are. As you can see, there's a few there that you can see. The ones in black are the tradable, and the ones in green are tradable, and the black are local. But that's not the point. Is that here we have the new cluster classification. I'd like to hand over to Duncan now. Duncan's going to take us through the next set of slides, which really start to look at your local strengths and compared to national trends and weaknesses.
Thanks, Will. So for those of you that were with us last time, I'm going to take this in a slightly different direction this time. So last time we looked at a strength and then explored the sort of the skills issues that were behind that and how the labour market looks, whereas this time we're going to look at a threat. But just for those of you that weren't with us, just to give you an idea about the starting framework. So what we've done is that we've plotted every one of those clusters in terms of two dimensions. On the x-axis, we have the location quotient, which is a ratio of the local employment share for that cluster over the national employment share. So 1 means that you've got the same jobs locally as nationally, and over 1.2 is where we normally think that it represents significant concentration. And then on the y-axis, we have the national projected growth from 2016 to 2021. And so the way this works is that if you've got a high location quotient and high national growth, then that must be a strength because it's something you're strong in that is growing well nationally. Whereas if you're got a high location quotient and a below average growth rate nationally, then that's a threat because that's an industry that is sort of facing risks. It's, the national trend is working against you. So if you're strong in it, that means that there are sort of relatively speaking jobs at risk. And so if Will can sort of step it forward a bit, there we go. And so I've plotted here the clusters, and the other change from last time is that we have moved beyond Basingstoke. Never let it be said that just because our office is in Basingstoke, we only deal in data from there. So this time we've got the Sheffield City region data. I think Lisa's one of the attendees today, so she can see the data for her own area. So that's good. And so what we've got here is each of the clusters plotted in terms of location quotient and the national growth rate. The green bubbles are the local clusters that Will was talking about. So they tend not to be a local specialism in any area, simply because they're spread far and wide, really. You get hospitals and schools and supermarkets everywhere, basically. Whereas the purple ones are the tradable clusters, and they are much more varied in terms of growth rates and location quotients. And the size of the bubble represents the number of jobs. And so step one more forward, Will, please. And so what I've done here is just highlight a few of them. So digital is the cluster that everybody wants to see grow because it's fast growing nationally. But in this case, it's not got a high location quotient for the whole of the Sheffield City region. Business services is a local strength, and that includes a range of supporting services that sort of range across administration and logistics and things like that. Production technology is something that's pretty much on the borderline. It's kind of a bit of a local strength, not the sort of the highest, but overall, and this is a long-term trend, it's declining in terms of the number of jobs. but the one we're going to focus on, because it's a very clear risk candidate, is Upstream Metal. And of course, Sheffield famous for its steel historically, which is a cliche, but I'm going to say it anyway. And so it has a location quotient of 4.5, which means that there are 4.5 times as many jobs locally as there would be if you took the national share. But if you look on the y-axis, we're sort of down at sort of -6% growth projected between 2016 and 2021 nationally. So it's an area that the sort of the national trends are working against somewhat. So what we're going to do is we're going to unpack that and see what it looks like as a local strength, but a sort of a national threat. And we're also going to focus on one particular risk, which is automation, and see how we can bring the data to sort of unpack that a bit, really. So if you go to the next slide, please, Will. So the first thing we do is we just find out what are the other areas where Upstream Metal is got a big risk. And again, at the top of the charts is the Black Country, another area that is so famous for its connection with metal that it's baked into its name. Then there's also Humber and Greater Lincolnshire as well. So, and you'll notice that the location quotients of all these four, which I believe are the only ones that get above 1.2, are all really high. So, Lincolnshire and Humber are around 3, Sheffield City region at 4.5, and Black Country at sort of 7.5, I think it is. So not only are they areas of concentration, there's a lot of concentration in them, and that partly reflects the kind of industries that you're talking about. They normally have quite a lot of heavy capital investment in the sort of the steel works and sort of other kinds of plant. And so it's not something that you can sort of scatter far and wide. There are quite significant economies of scale involved. So that's why you tend to get that pattern. So if you could go to the next step, please, Will. And so what we do here, and it gets a bit messy because there's a lot of subsectors that fall under Upstream Metal. What we've done is we've taken the same approach on the X and Y axis, so the location quotient on the X axis and the national growth on the Y axis, and we've done it for all of the subsectors that make up the Upstream Metal. And so when we say upstream, just in case it's not clear, what we're talking about is the initial processing of the metals that then later on go to downstream metal, where you're actually turning it into products of some kind. And so you'll see here things like rolling strips of metal and cold drawing of wire, casting of steel, and so on and so forth. And the thing that you notice is that those black lines do exactly the same job in the SWOT analysis term, is that there's a lot of subsectors, and Sheffield City region has got specialism in most of them, but most of them are projected to continue long-term declines in employment. So actually, with the exception of dismantling of wrecks and wholesale of metal ores, all the other areas represent some degree of industry risk to the area. Now, of course, this is employment terms. There may be a different side of this, and that's one we're about to consider, which is that loss of employment can sometimes go hand in hand with improved productivity. But in terms of the local economy, seeing where those jobs go is quite important as well. So if you go to the next slide, please, Will. So what we're going to do now is we're going to keep the same x-axis, which is the location quotient. And so again, we see Upstream Metal way out there on the right-hand side. But this time what we've done is we've given a risk of automation of jobs within those industries as the y-axis variable. And so what we've done is we've taken occupational risk of automation. So this is essentially some work that was done by two academics at Oxford University, and they looked at developing a model to predict which jobs were most likely to be automatable given the skills that they were using. So are they skills that involve either sort of computational power, where you are processing information, or repeatable sort of mechanical tasks that are more easily mimicked by computers and robots. And so they did that at the occupational level for the US, and we've mapped them over to the UK. And then using our staffing patterns data have then allocated those to all of the 4-digit SIC industries and then rebuilt them up to the cluster level here. And the sort of the black horizontal line is, I think, about 49.5%, which is the average risk to any job in the whole economy that it can be automated. And so you see something like production technology there is just above the average, whereas digital, which is actually, of course, the industry where a lot of the work is done to create the computers and robots that can change things, is right down at the bottom. But our sort of industry of interest, our cluster of interest, upstream metal, is pretty high up there. It's about 60-odd% overall. So not the highest, but it is quite significantly above average for automation risk. And so what we can then do, if you go on to the next slide, Will, is then unpack that. And so what I've done here is I've got all of the occupations where more than 10% of the people doing these jobs are in that cluster of upstream metal. There are other jobs which are also high automation risk, things like, for example, some admin roles, but they're in this industry just as they're in every other industry, and so they're not quite as relevant to this discussion. But what we've done here is we've ranked them all by the computerization risk that affects them individually, and then we've plotted the number of jobs that are affected as well. And so what you see is that some of the jobs that are really sort of central to the industry, so smith and forge workers, moulders and die casters, metal making process operatives and welding trades, have all got 80-90% plus probability of computerization given existing technology. And so, quite central roles to the industry are facing quite substantial automation risk. And so that gives you a sense of what that automation risk looks like on the ground. Now, the automation risk could be an opportunity as well. It can be that for the industry, it offers an opportunity to move to a different model, which will allow them to be much more competitive. But it does represent a substantial economic change, which gives economic developers something of a challenge to work out how to make the best of. And at that point, I'll hand back to Will.
Thank you, Duncan. That was great. And really, I like the fact we were using an example that wasn't Basingstoke. It made a great change. What I would like to do, though, is to talk about how we can use this type of insight using the cluster model to support organizations out there with strategy. We believe that strategy should be the overlying, as many people do, the overlying thing that drives interventions, and that there should be a hard data evidence base that can be used. So when we talk about targeting sectors that you want to grow, it's about identifying that they are sectors, the right sectors for your local economy, as opposed to replicating what is happening nationally. And it's also key to identify and monitor where targeted interventions will make the most difference when you start to look at it at an occupational level. I believe data should come to strategy, not the other way around, which is good common sense. It's no use if the data's an afterthought, if the decision making has already been made and then the data has been brought to it at a later stage. And critical, and one thing we're very passionate about, is bringing local data into the picture to understand your particular area and the interplay between your local strengths and national trends, and obviously global disruption. We are very much looking at the cluster model in regards to using it as a way of understanding risks, as Duncan has given a great example of today around automation. There are other risks that are out there, and I'm sure you could all add on to these, but specifically around automation. And these are areas where we're going to, the other areas are ones we're going to focus on in future webinars, around Brexit and the impact on trade and immigration on sector growth. And also looking at talent and the local impact on business rates and how you retain talent in an area, and how talent can be moved from an industry that is constricting to an industry that is growing, and how that can build into planned economic development activity. So if you haven't already, do go to our website and download a cluster report for your area. And have a read of it, and then what we'd really like to do is get your thoughts on it. Obviously, we're bringing data to this. What you can bring to this is that qualitative understanding of what's planned in your area, what's currently happening, and we're always interested in testing the model and the data that we have against your understanding. To do that, contact myself. My email address is here and phone number. Just drop me a line. Happy to talk about this. The next webinar that we are going to hold is on the 25th of February, and I'll go into more details on that on one of the next slides. There's opportunity for discussion here. I'm just going to quickly check back. We haven't got any questions, which is fine and well. But what I would say is if things do occur to you when you've looked at your particular report, or if you're listening to this after the event, because there will be recordings of this circulating, then do feel free to email through questions and suggestions for future webinars, which ties in nicely with where I'd like to end up. So the next webinar in the Strengthfinder series will be looking at localizing the industrial strategy, which I talked about at the beginning of the webinar. Essentially, what we're keen to do is to look at how through understanding local strengths and risks and opportunities, you're able to draw out a real local picture of how that national industrial strategy can be localized. That's obviously a requirement that we know has been given to LEPs, but we also know many local authorities are involved in that thinking at the moment. So we thought it'd be a good time to dig into that and focus on that in our next webinar, which is on the 15th of March. And we will send through details on how you can register for that as a follow-up to this webinar. So I'd just like to thank Duncan for co-hosting and joining me for this, and I'd like to thank everyone that has attended.